House prices do feel like they go up when interest rates go down. Are we actually seeing that in the stats? REINZ stats out, comparing this February data to last February and the month before in January. Well, compared to January, which doesn't have a lot of settlements and activity, it is quite a big change. Median house prices up 2.9% across the country and 6.4% across Auckland. However, I think the more meaningful change is basically what's been happening in the last 3 months. Now, if we look at the trend line from November and compare that to Feb, what you will tend to find is it's really North Shore City, which is kind of showing some very interesting positive movement. But apart from that, all else areas are kind of really flat. In fact, if we look at this graph, Papakura, maybe some negative territory slightly, some opportunities there for buyers. Apart from that, I think anecdotally, what are we seeing? So, I mean, as mortgage advisors, right, we do tend to see a little bit of activity very early on before people actually start buying. And in terms of inquiries, our numbers are up, definitely. I know investor lending volumes are up ever so slightly. So investors are starting to get more interested in the market. And it feels like those people trying to sell their home to buy a bigger home are able to just start to move a little bit faster as they become, I guess, more realistic. They know where the market is and they know where first home buyers will buy their homes at. So I do feel like there is going to be more activity coming on in the next 6 months to 12 months. It's complete speculation just by me, just based on inquiries and interest and lower interest rates that are happening. But it does feel like this kind of upward trajectory, if we do get one, will be very different to past ones because of the debt to income ratio. So debt to income caps right now, if we're doing a home loan servicing test, it is below debt to income caps, right? However, I can see just from the servicing calculations I'm looking at most of the time, it does feel like, maybe if prices start to rise, we hit those caps, say 6 months to 12 months from now, potentially. I would see that becomes more of a thing that buyers discover that, hey, they're hitting a DTI cap. They are becoming aware of the DTI cap. Definitely with investors, we've got a little bit longer to go, but we will get there. And it will be interesting how, when we do have a new Reserve Bank governor, well, that's actually also happening, how they treat a lot of the actual rules in the Reserve Bank at the moment. There's some shifts happening in terms of the capital required to be held by banks as well. And that, if that shift happens, there will be a lot more lending, I guess, that's available out there for people. And maybe with more supply, you would think that interest rates would come down a bit because you'd need to get that money out the door and there'll be a little bit more competition. But there's so many variables when it comes to interest rates, we can't really tell. But when you think over the next 6 to 12 months, it does feel like things are looking a lot rosier for buyers initially, then less rosier. However, as we know, as rules loosen up, interest rates go down. Initially, yes, it's great for buyers, but of course, once that starts to reflect on house prices moving up, it doesn't get so great. All in all, though, I think most commentators agree that it's probably going to be a pretty relaxed upward movement, if any. So yeah, thanks for watching. Hamish at monline.co.nz.